So really exciting times in the Bitcoin and crypto space.
Excellent.
I don't know if you had a chance, but there was a lot of people asking questions on the prior speaker, and you might want to address some of those. You know, I guess so. The launch point. There's a couple different launch points. We had Dan Moorhead speaking last month, and Dan said something like 20% of all Bitcoin is lost. Right, that's real fascinating.
I heard that. Yeah.
Yeah. Right. So 20% of all Bitcoin is lost. Dan's best deal ever was buying Ethereum at 5 cents. He told me. We had a guy who used to come to our group back when Bitcoin was 100, and he was giving away $20 and $25 worth of Bitcoin to people. So now I think Bitcoin's worth 50,000, and his phone's been ringing off the hook. Like, how do I find my account? Right? Because I guess that $20 of Bitcoin is worth $10,000 now, right? And he gave it away. Must have given it away to a couple of hundred people from our group. So it was really interesting. So you know, Bitcoin's on people's mind, crypto's on people's mind, and one of the things, you know, a lot of people have been very interested. Our group has really gotten involved in this since 2014 with Dan Moorhead. But you know, I guess some of the big questions are, you know, really how are you trading it? How are you hedging it? What's the impact of this ETF that was launched in Canada that Gudrun brought up? So what I'd like to do is first have you introduce yourself. And then, you know, in a couple of minutes, I'm going to end the polling, and you can see the poll results and see what people are interested in. But, you know, it's, you know, what are the moments that we should be looking out for? What are the moments you're looking out for, et cetera? So why don't you introduce yourself, and we'll go from there.
Yeah, sounds great. Do you want me to run through, you know, kind of a quick presentation? Or you want to do that at a later point?
I want you to introduce yourself first. And then start your presentation, and then I'll release the poll results in 5 minutes. And when you see them, you can decide how you want to approach the presentation.
Okay, sounds great. Yeah, so my name is Anthony Etman. I am founder and CEO of Ikigai Asset Management, along with my business partner, Travis Kling. We run Ikigai, which is a crypto asset management firm. Let's see if I can share my screen here real quick. So you should now be able to see this.
Looks good.
Excellent. Just quick disclosures. None of this is financial advice. If you want to invest with us, obviously you have to read our PPM. We can run through more of those later. I know we only have 25 minutes here, so I'm not going to dive too deeply into the thesis of why Bitcoin, the trust revolution, value mobility, distributed ledger technology are all very important, and why we believe they're going to be the best performing asset class of, you know, the coming 5, 10, 15 years and likely beyond. I'm going to talk more specifically to, you know, what we've been building from a fund perspective over the last 18 months and the performance behind that. So you'll see right here, this bonsai tree is a graphical representation of our investment engine. So we are a long, short, multi-strat. However, approximately 90% of our portfolio has been deployed into the strategy you see on the left here, which is programmatic discretionary, which is systematic, models-driven exposure to Bitcoin. So, you know, 90% of our portfolio is in actively managing exposure to Bitcoin. And that's with the explicit thesis of outperforming Bitcoin through cycle. So we're not looking to outperform on a month-to-month basis or on a quarter-to-quarter basis. We're looking to outperform through cycle. So peaks to troughs, you know, that's 3 to 5 years in terms of Bitcoin's typical cycles. You know, Bitcoin hit 20,000 in December of 17, and in December of 2020, it hit it again. So it's, you know, almost 3 years to the day. Performance since we shifted to this strategy, September of 19, we've outperformed Bitcoin by 272% gross, 128% net. So pretty significant outperformance. So we're up 516%, with Bitcoin up 244 over that time period. And you know, the Sortino is much higher, 3.9x than that of a long Bitcoin position. The volatility is less than that of a long Bitcoin position. So we're very focused on risk-adjusted returns. And here's what that looks like visually. So to give you a bit more background on, Travis and myself and how we came to be here today and how we came up with programmatic discretionary. Travis was at Magnetar and Point72 before we started Ikigai. He's a senior analyst at Magnetar and portfolio manager running a $200 million long short energy materials equities book at Point72. And both of those investment engines have pretty firm foundations in qualitative research and fundamental valuation. And easy way to think about that is you just have a lot of arrows in your quiver when you're looking at traditional assets to determine whether you're paying a lot or a little for a particular asset. And so you can go through and do all of that qualitative and fundamental work, and you should be able to go long your favorites and short your least favorites and earn a nice alpha doing that. That was the initial inspiration to the build out of kind of version 1 of our investment engine. Had firm foundations in qualitative research, fundamental valuation. Our investment universe was originally the top 150 liquid crypto assets by market cap, top 50 private projects. We had engineered and built our own arrows to put in that quiver to determine whether we were paying a lot or a little. And you got 6 months down the road, and it turns out that Bitcoin and crypto, or specifically crypto, is just not quite that rational yet. Fundamentals are probably more important than fundamentals in a lot of instances. And so at the same time, we've been building all of these quantitative tools. And so we had this library of quantitative signals, and we said, well, we should be able to model these out and backtest them and determine which ones or combinations of which ones could help us outperform Bitcoin specifically through cycles. So there's this great narrowing from, an investable universe of 200 to kind of 1. And big reason for that, Bitcoin is kind of king in crypto, as we all know, but also when you're looking at building a investment engine that is increasingly systematic and process driven and even automated, you need an ocean of usable, clean data to go do data analysis and data science on top of. And when you think about the amount of data surrounding the Bitcoin ecosystem, on which to build that. And, if you think of that as an ocean, as soon as you start moving down market cap, whether it's into Ethereum or outside the top 10, that ocean of data dries up into, a lake or a puddle or a pond. Just becomes significantly less. You need a big body of water there to go alpha harvest on top of. And so specifically programmatic discretionary, the programmatic side is a library of models that is looking at on-chain and on-exchange data. So there's no technical analysis, there's no RSI, there's no EMAs, there's no fibs, there's none of that. It's all crypto specific on-chain and on-exchange data. So that would be Bitcoin hash rates, wallet flows, exchange flows, order book analysis, funding rates, perps relative to spot, contango, all of that. There's a whole universe to look at. And each one of those models has the specific goal of determining the health of the current market structure regime. And the models express that through a output of a suggested exposure, which would be, say like between 150% net short to 150% net long. So as you can imagine, when if you have a library of models and all of them are in agreement that the current health of the market structure is healthy, the bumpers on your bowling alley relative to suggested exposure are relatively narrow. And if those models are conflated, the bumpers on your bowling alley are a little wider. And so this is where the layer of discretion that sits on top of those models is very important. Specifically, there's 3 slices of discretion. The first slice of discretion is what we call tea leaf reading of the models. Why is a model saying what it's saying? As it turns out, computers are actually relatively dumb. They only know what you tell them to know. And so the example we always use is, or I like to use, is the Plus token scam, which was a multi-billion-dollar Ponzi that occurred out of China in the middle part of 2019. And so prior to that, the responsibility for price discovery in Bitcoin, was sitting with BitMEX, Binance, Coinbase, and then you have this artificial supply shift, because after you run a Ponzi, what do you need to do? The runners of that need to go distribute and launder and wash the capital. And what that does is it shifts the responsibility for price discovery to liquidity providers out of China and Southeastern Asia. So our models are going to notice that and form a view on it, healthy or unhealthy. But it's not, they're not actually going to know about that external event. So that's the first slice of discretion that sits on top. The second slice of discretion is macro quantitative data. So that's the 2-year and 10-year yields, Dixie, the dollar index, the VIX, the volatility index, precious metals, gold, copper, silver, and all of those have correlations or lack thereof with specifically like Bitcoin through different market structures. And then the third and final slice of discretion is macro broadly, global macro. What's going on in the world? Is there election risk? Is there regulatory risk? What's going on with Brexit? President Xi's view on blockchain, COVID, and then kind of more specifically, around the margin is the following narrative getting stronger or weaker. And that narrative is Bitcoin is an insurance policy against monetary and fiscal policy irresponsibility from central banks and governments globally. So around the margin is that narrative getting stronger or weaker. And in 2020, that narrative got a whole hell of a lot stronger. And in 2021, it's looking like that's going to continue. And so you package that up and you kind of end up with programmatic discretionary. Moving on, it is, so what is Ikigai? Ikigai is a Japanese concept that means a reason for being. It exists at the center of 4 concentric circles of what you're good at, what you're passionate about, what you get paid for, and what the world needs. And to be honest, the world doesn't necessarily need another hedge fund, but the world does need this technology. We're building Ikigai because the most significant investment opportunity of a generation is also one of the most potentially positive catalysts to human prosperity since antibiotics were invented in 1928. And two sides of that coin, half of the global population, according to the Human Rights Foundation, lives underneath an authoritarian regime. So that's 4 billion people that can't trust their government to manage a sound economy, to manage a stable currency. So a non-sovereign, immutable, decentralized digital store of value is a vote for freedom. It's a way out of that regime. It's a path to prosperity for the billions that aren't necessarily blessed with the dollar, or the euro, or the yen, or the pound. I grew up in the United States, and as I'm sure many here on the call also grew up in a first world country that they've been blessed with the dollar, the euro, the yen, or the pound for a majority of their lives, and so it's hard to understand why we'd ever need anything else. Which is now the other side of the coin is that insurance policy. 25% of all U.S. dollars were printed in 2020. There's going to be more printed in 2021. That has created a sense of urgency for those with wealth in fiat denominated assets to look for stores of value. So the former part of that, with the 4 billion living in an authoritarian regime, that sounds a lot like something the world needs. The potential for positive societal change is incredible. That's Travis. That's myself. I'm happy to send this out afterwards. I mentioned this, that the space is astonishingly dynamic. It is our base case. It'll be the best performing asset class over the next 5, 10, and 15 years. And so taking additional risk on top of already compelling returns just doesn't make sense. The returns accomplished from outperforming through cycle, so catching the meat of the up moves and avoiding or profiting from the meat of the down moves, that's compelling. And that is basically the entirety of our thesis is accomplishing that. I think we can kind of pause there, and then we can just dive into
Anthony,
questions
I
of,
just want to,
what people are most interested.
Anthony, can you hear me?
Yep, I gotcha.
Yeah, great. Oh, please pull the thing back up. Pull the presentation back up, because I wanted to just go through a couple of items on
Yep.
like the second to last page, third to last page.
Yep.
So what's the greatest driver of, this 5 to 10 year Bitcoin is the best investment? Is that just fiat a printing
No,
press?
so it's not necessarily that. Yeah, it's not necessarily that we're married to Bitcoin. We're not Bitcoin maximalists. Bitcoin could very well be Alta Vista, and we have yet to see Google. But the assessment of the current risk-adjusted opportunity landscape and the way that we're thinking about building a scalable strategy leads us to Bitcoin. And the what you mentioned there around monetary and fiscal policy responsibility is definitely a big portion of that. There's 4 questions that we're always asking ourselves relative to crypto assets, and it's how ready is the world for the technology? How ready is the technology for the world? What do you need decentralization for? And how decentralized is decentralized enough? And Bitcoin specifically answers those 4 questions in a very compelling way. And as you move down market cap, it becomes much more difficult to answer those convincingly.
So,
and the beauty of having
the poll results,
the entirety of you.
Anthony, do you see the poll
Yep,
results?
I see them.
And the questions that are most important?
Yep.
I think number 1 is the political. What do you expect government's response to be? I mean, obviously the woman who heads up the European Monetary Council or whatever has said that they really need to look at Bitcoin because of all the illegal activity that's involved. And again, we know that's a MacGuffin, right? Because it's total misdirection, because Bitcoin is traceable. So politically, I think a lot of people see it as being unsavory, right? So because it takes away a lot of fiat power.
Yeah.
So I mean,
yeah, that's definitely a very common risk. It's a common risk that's brought up, and why would the United States allow Bitcoin to become really successful before shutting it down, regulating it, or taxing it into oblivion? And there is definitely some validity there. But the government is made up of people, Americans, and with constituencies, personal networks, and career histories, and so it's easy to forget, but these are elected officials who are put in office by American voters, or they're appointed by elected officials who are put in office by American voters. And as we all know, in America, those who have the power and the money to have the ear of elected officials, that's how our democracy works. And today. And so if you look at BNY Mellon and Mass Mutual and Stanley Druckenmiller, Stanford Endowment, Harvard Endowment, Guggenheim, BlackRock, the whole slew of institutions and some of the wealthiest and best investors on the planet getting involved. What comes along with them is they're very high priced and effective lawyers, and they're very high priced and effective lobbyists. And if you think that they are not, as they're considering getting exposure to Bitcoin, and after they have billions of dollars of exposure to Bitcoin, if you think they're not using their power and influence to ensure that the regulation around Bitcoin is shifting in a fashion that is favorable to their holdings, you're probably fooling yourself. All of those large institutions getting involved, BNY Mellon, the oldest U.S. bank, it increases the anti-fragility of Bitcoin, and it de-risks the risk around regulation.
So what happens to gold if Bitcoin gets to like $4 trillion?
What do you mean? What happens to gold?
Does gold lose its safe harbor status, or?
Oh, it's really hard to say. That I think it was Paul Tudor Jones that said Bitcoin's the fastest horse. there is still a lot of volatility, present in Bitcoin. There's an astonishing amount of risk. There's layers of risk and systemic risk and opaque risk. There's tether and tether court cases and scammers and exit scams and code bugs and sim swaps and rumors, false or true. So it's got a long ways to go. But if there were no risk to a Bitcoin investment, Bitcoin would be $1 million a coin. As how that relates to gold, the generational perspective, millennials tend to adopt digital things in digital nature. Bitcoin is considered digital gold a lot more readily than older generations. So I think that there's always going to be a spot for gold. It's been around for 5,000 years. Bitcoin's been around for 12. It's made an astonishing amount of progress in that time, but
it's phenomenal.
I think it really
talks about trust networks. And actually there's a great book talk on the history of money. I forgot who wrote it, but actually I think it's talks about the 5,000 year history of money, and talks about where money comes from, and trust networks, and how money is used typically for external trade but not internal trade. So I think that it's a really fascinating story. There was a question from Gudrun about your drop in performance in March of 2020, and why you didn't hedge it. I think it was like 25% drop. Maybe you can talk about that, or how you performed against the market in general.
Yeah, so in March of 2020, this is actually a testament to our long short strategy. In September of 19, we were up 7 with Bitcoin down 14, and then March of 2020, we were up 9 with Bitcoin down 25. That's because we were there. I think Bitcoin had a 54% drop on March 12th of 2020, and we were 15% net short going into that drop. And this is, again, to the power of catching the meat of the up moves and avoiding or profiting from the meat of the down moves. If you'd have bought Bitcoin on the 1st of January 17 and sold at the end of 2018, you'd have made 390% on your money. But if you caught just half the move in 17 and sold and then were flat and went on vacation for all of 2018, you'd have made 694% on your money. And there's not really an indication that that cyclical nature in Bitcoin is going to go away anytime soon, which is the opportunity that we're looking at, and it's why a lot of our investors have invested with us, so that they can sleep easier at night through the volatility and know that we've got eyes on it. And
when you say that you hedge Bitcoin, are you going short Bitcoin? Are you going to cash? How are you shorting it?
Yes. Yeah. So there's multiple ways you can do it. Over the counter with a prime broker like provider to get short exposure. There's also an instrument called the perpetual future that is much more liquid than spot physical Bitcoin that you can go long and short. The perpetual future, has a funding rate that sits in between longs and shorts. If longs are offsides relative to shorts, the longs have to pay for that right to be long to the shorts, and vice versa. If shorts are offside relative to longs, they have to pay for that right. And the nice thing from our perspective is we're able to hedge through risks. So recently there was risk around self-hosted wallet regulation. In November there was election risk, and so if our exposure is at say 100% net long, and that risk is coming around, we can hedge down to 50% net long or flat without impacting say long-term holdings in Bitcoin that have the clock ticking toward long-term capital gains, because the perp and spot physical Bitcoin are not fungible from like a tax bucket perspective.
And did you
that make sense?
Did you ever reply to this Canadian ETF question that Gudrun had asked?
Yeah, so if you all things like that. We've talked a lot about risks. What are the opportunities? Right now, the daily issuance of Bitcoin is 900 at $50,000, which we just hit today. Through the course of a month, that's 1.35 billion in new issuance for Bitcoin. And so the opportunity, if you have trillions of dollars of assets that are sitting in traditional, store of value or, low interest bearing type vehicles, for example, BNY Mellon or this ETF, those assets need a channel, a trusted, approved, qualified custodian like channel in order to get into Bitcoin. And so something like that serves to widen and deepen the channel from the oceans of trillions of dollar assets that sit over there into the lake that is Bitcoin. And so something like BNY Mellon is, it's like taking it from a channel to the Panama Canal, because you need, at $50,000, 1.35 billion a month. That's something like, 16 billion a year in order to gobble up new issuance of Bitcoin. If Bitcoin goes to 100,000, that doubles, 32 billion. And so, we don't tend to think about price targets, but anecdotally, I know of a single provider in the space that has 25 billion in demand for Bitcoin from large institutions throughout calendar year 2021. So it's not unreasonable to expect that the global demand for Bitcoin is somewhere, a multiple higher than that number, which means that new supply of Bitcoin at the $50,000 or $100,000 level is kind of, already has a home for allocators that are not planning to sell anytime soon.
Sure. Yeah.
So things like that are very important.
And besides that, I can think about, a dozen other use cases. Somebody else had a question here. They were saying, well, there was MySpace and then Facebook came along, right? Is there going to be a better Bitcoin at some point?
So the way that the underlying technology works and the kind of immaculate inception relative to, how Satoshi Nakamoto rolled this out, it is very unlikely. That's not to say that it isn't plausible. Again, if there weren't any risks to Bitcoin, the price would be a whole hell of a lot higher. But the beauty of having a long short strategy and having a focus on capital preservation and growth over a long period of time is that we're happy to change our mind. If it becomes clear that Bitcoin isn't going to work and it is indeed Ask Jeeves and Google comes along, we're going to be able to see that. We're going to see it early, and we'll be able to get to cash or short or adjust accordingly while preserving capital.
Right. Again, my only remark is that the first buyers of Ether are all the guys who are Bitcoin whales, right? I mean, they got it first,
right?
So
Yep.
some people are saying maybe this will work around the Bitcoin whales, but hard to believe because it seems like they're trusted buyers.
Yeah, and it's worth mentioning that we're building in Ethereum to the programmatic discretionary library of models this year. It's some of it's similar, some of it's different. Ethereum and the data surrounding that ecosystem, at the blockchain level, there's just different value drivers. But it's getting to the point to where it's compelling to include that. We're building this strategy to scale. And Travis is at 0.72, or excuse me, at Magnetar when he started there, they were running 260 million in the energy business. So when they left, he was managing 4.6 billion. So we know what it looks like to, build a scalable strategy that can take a lot of capital.
Now, how big is your fund?
Yeah, so our AUM right now is 100 million. We have a little over 100 partners. We're a traditional master feeder. So, Cayman feeder, Delaware feeder, we can take investors from all over the world.
How big was your fund last year? At the beginning of last year?
At the beginning of last year, we started the year around 2.5 million. So a lot of growth.
All righty. So fantastic. This is really great, Anthony. I really appreciate it. And, so I was talking to somebody when Bitcoin had its first leg up recently from like 3,000 to 5,000. and he sent me a note. He said,
Mhm.
Bitcoin's going to 100,000. Like, that's like the, typical Bitcoin investor speak is like, yeah, all the way to the moon, man. Right. So he said, Bitcoin's going to
Mhm.
100,000. I was like, well, maybe, who knows, I think if a
Yeah,
100 company cash management groups buy into it, it's going to go up higher. That's for sure.
yeah, it's the way that we tend to think about it is kind of a three-rung ladder. We don't tend to think about it, in terms of price targets or stock to flow. Those are kind of common ways to think about it. The first rung of our ladder is the models, and whether they're saying this is healthy or unhealthy at different time periods. That could be minutely, hourly, daily, weekly. We move up, and to the macro perspective, a little broader view around the margin, is that Bitcoin is an insurance policy against monetary and fiscal policy responsibility against with central banks and governments globally. Is that narrative getting stronger or weaker? And then the third and final layer is just convexity. Is the current price fair or unfair? Deeply fair, deeply unfair. And if you're in a state of high convexity, you just simply need a dramatic shift in price upward in order to reach a more fair price. And that's our current stance. And so then you just move back down to the second layer and then the first layer, and you're doing that kind of every day.
Perfect.